All right, traders, welcome to a very quick end of day video for Friday, August 11th. And risk disclaimer is in front of you. Everything that we're going through in these videos, of course, is for information purposes only, not giving out any advice or recommendations. So just as always, I like to go through a couple observations once we get to the end of the day. What I noticed today after we saw kind of more of the same price action, just a grinding lower, bounces are being sold, more of some of the same. One of the things that I noticed is, a couple of the strongest stocks of this year, Nvidia really got hit hard today, NVDA, right? So sometimes the strongest names are the last to fall. I'm not saying that this is done, because this is a break below the 50-day moving average, but this was one of the worst performers of the day, down 3.6%. Also, another really strong stock of late, also a high flyer, so you can argue both ways on this, but this was down 8. SMCI super microcomputer was down 8%. Now, again, I don't know if the low is in these things, right, with a break of the 50-day moving average, so it's something to kind of watch and pay attention to. But it just feels like we're kind of getting to the point where we're getting washed out. Decent volume on these sell-offs as well. And if you look at the Qs, at this point, right, the Qs have been down, right? So it's getting to the point of pretty washed out. When you're down 7 out of the last 10 days, you can kind of make these generalizations. Now, what I found was the most interesting out of pretty boring price action today overall for the indices, is if we look at the Qs, we have this version point of control that's just sitting here, right? I like to see once we're kind of pulling back or moving up, usually these things act like magnets and they usually get taken out. So the NASDAQ futures also had one of these, right? Again, they're different volume profiles because there's different volume that takes place in the futures versus the ETF, but this was taken out to the downside. So I think we're very close to this, and that could mean that we're getting closer to a possible bounce. I don't know. I don't think that we're going to get a trend reversal, but we're getting to the point where a bounce is in the cards possibly for next week, in my opinion, right? I don't have any evidence of this. It's just kind of something that you, over time and experience, you get used to when you're starting to see, a decent move to the downside or to the upside, right? I mean, markets don't go straight up. They don't go straight down. So one of the things that I thought was the biggest development was what's called a VIX divergence. So what does that mean? Well, normally when the market goes down, the VIX goes higher, right? Usually it's faster to the downside, and the moves to the downside are faster, and hence the volatility increases and the VIX goes up, right? And when the market climbs, usually the VIX goes the other way. Well, what happened today? Well, let's first look at the S&P. What did the S&P do today? Right, the S&P just barely finished down for the day, right? I think SPY was down a little bit less than 10 basis points, so not really that big of a deal. That's also sitting just right below its value area at this point. But what did the VIX do today? Right, normally that would mean that the VIX would be going up. Now, if it was a 1% move in the VIX, I wouldn't think that big of a deal of it, but the VIX was actually down 6% today. So volatility actually went lower when the market was basically flat to lower. That's not the usual behavior there. And I think that's kind of telling us something, right? It could mean that volatility is kind of drying up, or selling is kind of drying up a little bit, right? Let's do the same exercise for the Qs. Right, so the Qs, which we just went over that chart and talked about the divergent point of control, we're down about 2/3% today. So much more than the S&P. They underperformed. Now, what did the volatility for the Qs do today? Now, again, it's you can't use the VIX because the VIX measures the S&P. There is something that's called VNQ, and it was also brought to my attention that there's also another model out there which is called VolQ. Right, they look at different, a little bit different option strikes. This looks at 30-day implied volatility of the NDX. All right, bottom line is this. Whoops, not VNQ. Sorry about that. That's the wrong thing. So let's bring up this one first. VolQ. BNQ is the REIT ETF. Sorry about that. This was down 2.7% today. What I'm thinking of is I think it's VNX. Nope, that's not it. Hold on one second. I'll get it for you. All right, I was close. It's VXN. VXN is also the volatility of the NASDAQ 100 or the Qs, right? So this was also down 2.7% today. So again, it tells me that something kind of this stands out like a sore thumb on a down day. So what I would expect for next week, right? A couple of things could happen. Now, of course, there could be something over the weekend that could drive market prices, and that's the unknown, right? We never know what that's going to be. But I would say what could be interesting is if we open up lower on Monday, take out that red line, the virgin point of control. And then what I would be looking for is breadth to kind of pick up and to look for a reversal day, right? In trading, I always like to look for some type of a confirmation. So that's what I'll be looking for Monday morning. All right, guys, just wanted to provide a little bit of some context and something that stood out to me like a sore thumb today, and something to kind of think about for next week. Have a great weekend, everybody.